I'm not saying that gold's going to 36,000 or 40,000. What I think you got to realize is that things swing in pendulums, and the stock market from that point to most recently swung dramatically 180 degrees, and things tend to swing back the other way as well. So I don't think there's a number that you can say that's too expensive for gold. It's relative to everything else that is happening. And the United States is also doing something about gold that we don't know yet. Gold will start work back to and even reach new highs.
The recent surge in gold prices has ignited significant discussions among investors and analysts about whether gold could reach $4,000 per ounce by 2026. After briefly touching a record high of $3,500, the price returned to around $3,332 as equity markets regained momentum. The rise in gold has been driven by several factors, including substantial central bank buying, increasing geopolitical tensions, and evolving monetary policies. With differing assumptions, financial institutions like J.P. Morgan and Goldman Sachs have released forecasts that point to $4,000 as a realistic target. Peter Grandich, a well-respected market veteran, views the recent rally as a reflection of significant macroeconomic pressures and an ongoing wave of institutional buying. Gold's climb to $3,500 marked a key milestone, but the pullback to $3,332 illustrates the delicate balance between risk appetite and the need for safe haven assets. A crucial element driving this momentum is the continued aggressive buying by central banks. According to J.P. Morgan's estimates, central banks are expected to purchase 710 tons of gold per quarter in 2024, signaling a strategic shift away from traditional fiat currencies, particularly the US dollar. Despite gold's rapid price increase, central banks have shown little concern for short-term volatility. Their actions suggest they're focused on long-term stability rather than short-term profits. Moreover, the repatriation of gold by over 30 central banks further suggests that these institutions are preparing for potential shifts in the global monetary system. Peter believes the pullback in gold prices, though notable, does not diminish the long-term outlook for the precious metal. He emphasizes that central banks' continued accumulation of gold, particularly from major economies like China, highlights their strategic intent to position gold as a central part of the global financial system. This is not about seeking immediate profits. Central banks are securing long-term assets, anticipating changes in the global economic structure. The repatriation of gold by numerous central banks further signals the strategic value of gold in strengthening national reserves and preparing for future shifts in monetary policies. Now, we present the clips from Peter Grandich's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The world has woken up, still not so much here in North America, to the ultimate currency, and that's gold. And while it got very overextended, as I noted yesterday morning in a special alert to my clients, that we were at the highest technical bearish levels of MAC, and the price of gold was 25% higher than its 200-day moving average. That was screaming for a correction. But the very fact that the physical demand for gold now is so widespread and increasing and moving where it used to be the dollar and bonds, I think what we're realizing is that there's a different part of the world, which tends to be in the East, where more of the economic growth and power goes to and is increasing, and they recognize gold as the ultimate currency and not the dollar or the yen or anything of that nature. And once this corrective phase for gold is over, and it could correct 10 or 20% from its high, but nevertheless, I still think eventually it'd be a lot higher than the ultimate high that it had just the other day.
So the ultimate high being 3,400 something dollars.
We ended up going much higher than 3,600. I'm not saying that gold's going to 36,000 or 40,000. What I think you got to realize is that things swing in pendulums, and the stock market from that point to most recently swung dramatically 180 degrees, and things tend to swing back the other way as well. So I don't think there's a number that you can say that's too expensive for gold. It's relative to everything else that is happening. The United States is also doing something about gold that we don't know yet, but there's too many hints, especially from the Secretary Treasurer. I have a lot of respect for, by the way. I think he has a fairly sound mind, and I think the president would be better served listening more to him than Ludnick and a few of his other more hawkish kind of wild thinkers in his group. But he is continuing to speak about gold in a way that it would not surprise me that the United States is going to use gold somehow to better itself economically, whether it's just repricing it so it frees up opportunity to borrow more money, or introduce some sort of gold-backed bond in order to attract much bigger capital and not have to pay a lot of high interest rates. But the gold market is just seeing the first leg of a huge bull market that needs a correction, but I still think someday the price will be a lot higher than 34 or 3,500. Why have these central banks taken such a massive position and on top of it, repatriate their gold to the point of 33 or 34 different central banks? They don't have the ability to flip it to somebody and sell and lock in the profit. They're acquiring this gold for something that's going to be related to some change in monetary, whether it's regional or worldwide, and that's their reason. And so, and it's going to surprise people one day to realize that places like China hold a lot more gold than their noted reserves. And what was really interesting is, despite a move extremely fast from under 2,000 to 3,500, that central bank buying not only didn't dry up, it began to be even more constant and strong. So I think there's still a lot of room for the gold market, but it was so overbought and so in need of a healthy and necessary correction. But I think they'll be regular buyers for weeks, months, if not years in front of us. Major producers are legally printing money through the massive free cash flow that we're seeing. And what's going to transpire here is it's going to be very difficult for the S&P 500 to see earnings growth this year. One of the other things we didn't get to talk about is the more and more signs of the economic slowdown that's happening here in the U.S. So what will happen to the generalists, and most people are followers in the Wall Street, not leaders, they're going to start to see that there's no sectors that they can see good, dependable earnings growth for the foreseeable future, except one: gold producers. It's one of the reasons now we're starting to see not only people buying the stocks, but I think this news that was done with Barrick selling to basically an investment group, one of their major mines, is another signal of what's to come for gold producers, particularly the companies that are producing the metal. The exploration's another story, and that's still just starting to stick its head out. But I think longer term, the GDX and even the GDXJ have a lot higher price levels to reach before there's any really consideration to any meaningful top.
Silver is increasingly gaining attention as a strong contender in the precious metals market, with many analysts suggesting it could soon outshine gold. Historically seen as a secondary asset to gold, silver's fundamentals have improved significantly, positioning it for a potential breakout. The gold-to-silver ratio has reached historically high levels, often preceding silver's outperformance. Beyond its traditional role as a store of value, silver's industrial demand, particularly in electronics, solar energy, and other sectors, adds another layer of optimism for its future price trajectory. Silver's potential to rise due to its diverse uses makes it a metal worth watching closely. A major factor driving silver's potential rise is the strength of the physical market, which has been a defining feature of the current rally in gold and silver. Unlike past cycles where speculative paper markets influenced prices, today's upward momentum is primarily fueled by real physical demand. This robust demand for the physical metal has created a solid foundation for price growth. With silver being undervalued compared to gold and its role in various critical industries, the outlook for silver remains promising. Investors are beginning to see silver as a secondary metal and a key player in the precious metals market, poised for significant growth in the coming years.
For many years, especially in my days of speaking, including that beautiful town behind you, I got abused by the silver bugs because when I was be bullish on gold, I would say this statement that silver is like kissing your sister. And I always put gold ahead of silver. But a couple of weeks ago, I changed that opinion and I upgraded my view to where I felt silver could be on equal terms with gold. One, because the fundamentals have improved greatly over the years. Two, there's been clearly manipulative forces trying to prevent it over a certain price. And three, the ratio between the gold price and the silver just became to a ridiculous level. And in fact, just a couple of days ago, I said I thought silver could lead gold here. And sure enough, as you and I speak, with gold down over $100, silver's up almost $1, and that is another sign that better days are ahead for it. Now, it will be capped somewhat here while gold goes through this corrective phase, but I think now it has all the ingredients to take out that key resistance in the 35, 36 area. And I think we're going to see a much higher silver price later this year, as well as a gold price. I think they're going to proportionately perform well. I mean, it is a lot for me to put silver on the same terms of gold. That's not something that historically you'll find in the Grandich track record. But I do think it warrants the similar interest. And I think a balance between both of them is key. And then, of course, just this is important to note, there's another metal that's doing extremely well. And it was my favorite metal for the year. It's doing a lot better even than I thought it would be at this point, and that's copper. And so between gold, silver, and copper, and even the fact that I became, I put my bullish hat back again on uranium after getting out near the top, I still think the metals as a group still have a ways to go to the upside, that we're not anywhere near other than an intermediate top maybe a few months from now, but there's still a long way to go in these prices. And one of the key reasons, David, is how strong the physical market is now. When we had the big move in gold in the 1980s, and of course in 2010 and 11, it was driven through the paper market. But now physical market is just destroying the paper hangers that used to manipulate the gold price. And that's, as long as we continue seeing physical demand stay constant, the metal should just work higher over time. The United States days of world leader, whatever terminology you want to use, is shrinking, if not gone. And the very fact that none of the countries of any size rushed and begged for forgiveness. And quite frankly, he caved. And there's another fallout from this, Dave. It's not going to be seen in a matter of hours or days, but in the coming weeks. And that's his political strength here. We're already seeing some of the strong MAGA supporters. Now, I'm neither a MAGA supporter or a Trump hater, so I'm not liked by either side. But one of the things we're already noticing is questioning not only this action on the trade, but other things that were spoken about that they feel he's not acting on. So he's lost playing cards in this. And no matter how it eventually settles here, I think this is beneficial to countries outside the U.S. and not to the U.S. And it's one of the reasons why I don't have any exposure to general U.S. stocks other than those related to resources, and why I still believe places like China, Asia, Singapore, some other countries, particularly in Asia, are more attractive to me than the United States is.
Would you be a buyer, or would you go long on the U.S. dollar and dollar equivalents now that the DXY has plummeted so far already?
Well, the dollar got to a point of a critical support level and extremely oversold. Same could be said for the S&P and the bonds, and that's why yesterday morning I called for this significant counter trend rally. I don't think it's going to last very long. I think the dollar eventually breaks that support, and on the dollar index, it gets down to the 89.90 area. So there's still another 10% or more decline in my eyes for the US dollar sometime later in the year.
The current precious metals market is witnessing an intriguing shift, with gold and silver poised for potential gains, each driven by distinct factors. Gold has been on a remarkable upward trajectory, fueled by strong institutional demand and macroeconomic uncertainties. JP Morgan's near-term target of $3,675 by the end of 2024 is based on expectations of continued stability in inflation and ongoing demand. However, should geopolitical tensions rise or market volatility intensify, gold's price could easily overshoot these projections. Looking ahead to 2026, JP Morgan projects a longer-term target of $4,000, supported by limited mining supply, increasing production costs, and sustained demand, particularly from Asian markets. This cycle stands apart from previous ones due to the growing involvement of institutional investors and broader de-dollarization trends that continue to reshape the global financial landscape. In contrast, silver is gaining attention as its price rises, driven by a mix of industrial demand and an increasingly attractive price relative to gold. The gold-to-silver ratio has recently hit extreme levels, and many experts are now eyeing silver as the potential outperformer. That's it for today. Share your thoughts on Peter's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.